Compounding isn't just a financial term, it's the secret sauce behind building life-changing wealth. It's a powerful principle that allows your money to work for you, growing exponentially over time. Imagine this: a single dollar, properly invested, turning into tens, even hundreds of dollars without you lifting a finger. This is the magic of compounding. And today, we're diving deep into how it works, why it's so effective, and how you can harness it to become rich. First thing first, what is compounding and why it's powerful? Compounding isn't just a financial term. It's the secret sauce behind building life-changing wealth. It's a powerful principle that allows your money to work for you, growing exponentially over time. Compounding is often referred to as earning interest on your interest, but it's so much more than that. At its core, compounding happens when the returns on your investments are reinvested to generate even more returns over time. It creates a snowball effect where your money starts to grow at an accelerating pace. To illustrate this, let's take an example. Imagine you invest $1,000 at a 10% annual return. After the first year, you'll have $1,100. If you leave that money untouched, in the second year, you'll earn 10% not just on your initial $1,000, but also on the $100 you earned as interest. Over decades, this small increase compounds into massive growth. This principle works with any kind of return, whether it's stock market gains, interest on a savings account, or reinvested dividends. The key is to start early and let time do the heavy lifting. The longer your money stays invested, the greater the compounding effect. However, time isn't the only factor. The rate of return also plays a critical role. A higher return rate amplifies the effect of compounding, making it essential to invest wisely and strategically. Choosing investments with consistent returns can make all the difference. Compounding isn't limited to money, it applies to knowledge, skills, and even habits. When you focus on small, consistent improvements, the benefits add up and lead to exponential growth in every area of your life. 2. The Rule of 72. How long will it take to double your money? One of the simplest ways to understand compounding is through the Rule of 72. This rule helps you estimate how long it will take for your investment to double based on the annual return rate. Divide 72 by your rate of return, and you'll have a rough idea of how many years it will take to double your money. For example, if you're earning an 8% annual return, it will take approximately 9 years, which is 72 divided by 8, to double your initial investment. Now imagine the power of doubling your money not once, but multiple times over decades. That's how wealth is built. This simple formula is a great motivator for investing early and consistently. Even small contributions, when doubled over time, can grow into a substantial amount. Let's say you invest $10,000 at 8% annual growth. After 9 years, it becomes $20,000, and in another 9 years, it's $40,000. With time, those numbers skyrocket. The Rule of 72 also highlights the impact of high-interest debt. If you're paying 18% interest on credit card debt, your debt doubles in just 4 years. This is why avoiding high-interest debt and focusing on investments with good returns is crucial. 3. Start early. The magic of time. Time is the single most important factor when it comes to compounding. The earlier you start investing, the more time your money has to grow. This is why young investors have a significant advantage. They can take full advantage of decades of compounding. The takeaway here is simple: don't wait. Even if you can only invest a small amount, starting now is better than waiting for the perfect time. Time in the market beats timing the market every time. If you're not in your 20s, don't be discouraged. It's never too late to benefit from compounding. The key is consistency. Invest what you can, as regularly as you can, and let time work its magic. This is also a great moment to check out our video, How to Make Your Money Grow, Tips and Tricks. Find the link in the description below for actionable strategies to optimize your investments. Don't miss it. Subscribe and click the notification bell to stay updated. 4. Reinvesting earnings, a game changer. Reinvesting your earnings is a crucial step in maximizing the power of compounding. Whether it's dividends from stocks, interest from bonds, or capital gains, reinvesting ensures your money continues to grow. For example, imagine you invest in a dividend-paying stock. Instead of cashing out those dividends, reinvesting them allows you to buy more shares. Over time, these additional shares generate their own dividends, creating a compounding effect. Reinvestment isn't limited to stocks. With mutual funds, exchange-traded funds, ETFs, and even real estate, reinvesting your profits accelerates your growth. Many financial platforms offer automatic reinvestment options, making it easier than ever to stay on track. While reinvesting can seem slow at first, the results become dramatic over time. The key is patience and consistency. Avoid the temptation to withdraw earnings for short-term expenses and focus on the bigger picture. 5. The importance of consistency in compounding. While the power of compounding is undeniable, it only works if you're consistent. Consistency is the foundation that supports long-term financial growth. If you invest large sums of money up front but fail to contribute regularly, the compounding effect will not be as powerful. It's not about how much you can contribute at once. It's about contributing consistently, even if the amount seems small. Think of compounding as planting a tree. Each small contribution you make is like adding water and nutrients to that tree. Over time, the tree grows taller, the branches spread wider, and the tree produces fruit. In the same way, when you consistently invest a portion of your income, the returns will grow exponentially, and you'll eventually see wealth that surpasses what you initially contributed. For instance, let's say you invest $200 per month into an index fund with an average 7% return. After 10 years, you'll have contributed $24,000, but your investment will have grown significantly beyond that. The key to consistency is discipline. Whether the market is up or down, you should stay the course and continue contributing. Markets fluctuate, but compounding doesn't care about short-term volatility. It's focused on long-term growth. Over time, those monthly investments become a powerful force that builds wealth beyond what you thought was possible. Lastly, consider automating your investments. Set up automatic transfers to your investment account so you never miss a contribution. This takes the stress out of investing and ensures that your wealth-building plan stays on track. 6. Compounding in real estate, a hidden gold mine. While stocks and bonds are often the focus of discussions about compounding, real estate is another area where compounding can create massive wealth. Real estate offers both appreciation in property value and rental income that can be reinvested. These two factors, when combined, create a compounding effect that can dramatically increase your net worth over time. This process is often referred to as forced appreciation. While the market value of the property may rise, your efforts to renovate, upgrade, or add value to the property accelerate the appreciation. Plus, by reinvesting the rental income into more properties, you can multiply your returns exponentially over time. In addition, real estate provides the unique opportunity to leverage other people's money through mortgages to accelerate compounding. You can borrow money from the bank to purchase property and still earn a return on your full investment while only putting down a fraction of the actual value. This leverage allows you to control more assets, increasing your wealth more quickly. Compounding is the most reliable way to build wealth over time. The earlier you start, the more powerful its effects become. By combining consistency, smart investment choices, and reinvestment, you can unlock the true potential of your money. Curious about how to optimize your investments and accelerate your financial growth? Our next video, How to Make Your Money Grow, Tips and Tricks, dives deeper into actionable strategies you can implement today. Don't miss it. Subscribe and click the notification bell to stay updated. This video is for informational purposes only and does not constitute financial advice. Always consult with a licensed financial advisor before making investment decisions.